What's going on, guys? Welcome back to the Hungry Wolf Blueprint YouTube channel. I am Majid Assaf, the founder of the business, and on this channel here, we're going to be sharing credit secrets that very few people know about to be able to secure anywhere from $100,000 to $250,000 at 0% interest. My team and I have helped over 300 entrepreneurs, business owners, and real estate investors to secure this funding. And I myself have secured more than $500,000 in 0% interest business credit cards. It is quite a detailed process that we're going to be talking about here of how we fund our clients and how we prepare the profile. But what we want to share with you is what are the requirements, what are the guidelines so that you can secure the maximum amount of funding possible. And I also want you to understand why those requirements are in place and why they're important and how you can actually make an impact on your credit score and build up your file so that you can be fundable at some point in the future. If you wanted to get yourself 0% interest business funding, or if you wanted us to help you. With that said, let's dive in here and let's take a look at the details together. All right, so here are our guidelines for maximum funding. We're going to talk about the requirements for your personal credit profile as well as on the business side. And we're going to talk about what is the bare minimum that we recommend and what is the optimal score or detail on your profile to get the most amount of funding. So starting out with the credit score. We want your credit score to be minimum 700 plus to be fundable. 680, if your credit score is around 680, you're likely not going to get high limits when you do the 0% business credit card applications. That's why we recommend 700 plus to be the minimum score that you want to have before you start applying. Now, if you're even higher than that, 720 plus, 750 plus, that's even better, and you're even more likely to secure higher amounts of approvals when you're doing the applications. Now, talking about negatives, late payments, charge-offs, collections, typically you don't want to have any negatives on your report. If you do have any, I would definitely recommend doing something about it, maybe trying to clean up your credit or signing up with a credit improvement partner, because those are definitely going to lead either to denials or very low limits on the approvals. What about the total credit card limits? Ideally, we want you to be above $15,000 in total credit card limits. And what this means is that the sum of all of your personal credit cards needs to be at least 15K. If you have 3 cards, for example, and each one is 5K each, you would meet that bare minimum requirement. Now, what's even better is if you have above 25K. That's a stronger profile, and that is going to lead to more funding as well. What about the highest limit card? The bare minimum that I would recommend is to have at least 5K on as your highest limit on your personal credit card. If you are there, you can, do a credit line increase, end up maybe with like a 7 or 8K card, and you'd get some nice approvals. But what's even better is if you have at least one card with a 10K plus limit, because that is going to lead to higher approvals as well. Now, what about the utilization? Less than 30% is acceptable, but we highly recommend being less than 10% utilization. And what do we mean when we say utilization? We're not just talking about the sum of the usage of all your cards. Each of your personal credit cards needs to be less than 10%. That is to get the best results. Now, what about credit age? For credit age, we would recommend to have at least 3 years of credit age. 5+ years is even better. Now, for credit age, the reason why this is important is because if you have 4 or 5 personal credit cards, we want your average credit age to be at least 3 years. That's what the banks like to see. Now, when it comes to inquiries, generally, you want to have very few inquiries before you start applying for the funding. We recommend at least Anywhere from like 1 to 3 per bureau is acceptable. More than 3, you're pushing it, and I would, definitely want to do so. You definitely want to do something about the inquiries before you start applying. Um, Even better is if you just have, 1 per bureau or less in the last 6 to 12 months. Now, when it comes to the business profile, we spoke about the personal credit profile. On the business side, your business credit score does not matter for these business credit card applications. So your Experian business or Equifax business, or anything on, for example, Dun and Bradstreet or NAV, will not have an impact on your applications here. And your business type also doesn't matter, whether you're an LLC or a C Corp, but we would not recommend setting up yourself as a sole prop because sole props usually get, much less in funding. So ideally, LLC or a corporation is the best structure to go with. Now, having a little bit of age on your corp can help, but even if you don't have a business yet, you can still set up a fresh LLC, wait a little bit, and then start doing the applications and get some good amounts of funding as well. Now, when we think about both the personal credit profile and the business credit profile, this is what we want the profile to look like, or what you'd want your profile to look like before you start any funding applications. This is going to be the way that you'll get the highest likelihood of approvals and getting good amounts of funding. All of these criteria need to be met for you to be fundable, so to speak. So now we're going to talk more about what does your credit score consist of, right? We talk about 700 credit score, 750 credit score, but what does that mean exactly? What are we, what is it made up of basically? How can you actually make an impact on it? So the first criteria is, and it's made up of five different factors. The first one is your payment history. This is the one that is the most important, that has the biggest impact. And I mentioned having negatives and late payments, being one of the biggest problems if somebody wants to improve their profile, because when they look at payment history, they are looking at your percentage of payments that were paid on time. So just ending up with one late payment or one collection can drop your score by 100 points. And we've seen it happen to clients multiple times. So if you do have a late payment or something like that, definitely worth looking into and seeing what you can do about it to get it removed. Now, besides the late payment itself, it's also great to keep in mind how you can prevent those from happening, right? So I always recommend, if you have credit cards, if you have any kind of car payment, try to set all your stuff up on auto pay so that you don't end up in the situation where you're missing a payment because you forgot, or maybe you made a mistake and it didn't work out, and when that goes on your credit report, it's going to have a big impact on your profile. Now, what about the amounts owed? What is meant by this is your revolving credit. So when it comes to your personal credit cards, and we talk about utilization, when you have your cards maxed out, that's going to bring down your credit score. We said earlier we want to keep our usage ideally less than 10% per card, because once you pass the 30% threshold, that's when you going to start seeing it impact your personal credit score. So for example, if someone has a $10,000 personal credit card and they're using only $1,000, great, there's going to be no impact to their score. Once they pass using 3,000 or once it gets past 50%, like if they're using more than $5,000, this is where you start seeing the score dropping by 60, 70, 100 points, even if it's maxed out. The reason why the amounts owed is so important is because this is the one that you can possibly have the most control over and you can impact, because if you're able to pay down your cards, or sometimes we get our clients different types of funding, like a revenue-based loan or a personal loan or something along those lines, to pay down the usage. As soon as we've done that and we wait for a little bit for it to post, that's going to bring your score back up. So that is the one that has a big impact. 30% has a big impact on your score, but it's also one that you have, a good amount of control over if you can pay them down. Now, the third criteria, this is the age of your credit, the length of your credit history, right? And that impacts 15% of your credit score. What this means is if you have, let's say, 5 personal credit cards and your oldest one is 7 years age, that's really good. That's a good place to be. But because then you have, a good amount of credit history. On the other hand, if you have 5 cards and your oldest card is only a year and a half old, then you don't really have that much credit history. So that'll bring down your overall score some. This one has 15% impact, so it's somewhat significant, but it's not a major one like payment history or amounts owed. Now, new credit. This is where I was talking about inquiries. Banks do not like to see a large amount of inquiries fast, a lot of applications taking place fast on your report before you go and apply with them. So having a lot of inquiries can lead to a credit score drop. So definitely worth looking out for those before you start doing any applications. And the last part, this is your credit mix. So what this means is the types of accounts that are on your personal credit report. For example, if you have one person and they only have 4 personal credit cards, compared to somebody that has 3 personal credit cards, maybe a mortgage, maybe a student loan, and a car loan, the person that has the mix is going to have a stronger credit profile. The reason being is that the banks like to see that you are managing different types of payments and different types of credit and making those payments on time. So that brings us to our conclusion here. We covered what are the requirements for funding, what are the criteria that make up your credit score, and how you can make an impact on that as well. So I hope you enjoyed this video. Feel free to like, subscribe, and if you'd like us to help you secure funding like we do for our clients, if you are fundable based on the criteria that I mentioned earlier, we'd be glad to help. Feel free to reach out or click the link in the video here and fill out a couple of questions, and we'll see if you qualify. Thank you. Until next time.